Your entire trading career depends on how well you can find the right supply and demand levels. The problem is everyone does it wrong or overcomplicates it. But in this video, I'm going to show you exactly how to find the perfect levels once, and then you can trade with them forever. Let's begin. So, what exactly is a supply and demand level? Well, supply and demand are the real forces behind every market move. With the right levels, you can pinpoint exactly where the market will move next or reverse. And that's the greatest advantage you can have as a trader. Forget about algorithms and market makers and all that. I mean, it's easy to blame mysterious forces every time the market does something, but the truth is, it's not even that complicated. The market, at its core, is just a constant battle between buyers and sellers to get a fair price. And this is all you need to remember. The market only follows two rules. The price will keep rising as long as buyers are willing to pay higher, and the price will keep dropping as long as sellers are willing to sell lower. That's it. If buyers are more aggressive than sellers, then they'll fill up all the orders and push the price up, and vice versa if sellers are more aggressive. It's very important to have this mindset because you want to look at the market in a completely neutral way. You don't want to have a bias or any beliefs that get in the way of your objective analysis, because that's when you start getting inconsistent and ruin your profitability. So that's step one. Understand that the market is nothing more than an auction between buyers and sellers. Now that we know how the market operates, we need to ask ourselves a more important question. How can I trade this? Well, now that we know that the market is an auction based on buying and selling pressure, we can look for areas on the chart where this buying and selling pressure is the most active. And this is where there's the highest chance for large buyers and sellers to step in and create clean, tradable moves. To find them, we follow the volume. The market needs volume to move around. If there's no volume, there's no movement. And if you find the volume, you find the next trade. So volume is extremely important because it'll highlight the levels that the market finds the most important. Volume concentrates around a few key price levels. And the way price typically moves is that it'll hover at one key price level until one side gets more aggressive and breaks out. Let's say it's buyers in this case. So the market is moving sideways as both buyers and sellers are balanced. Then suddenly buyers get aggressive. Well, this will push the price up and create an uptrend. And since buyers are in control now, and there isn't much volume to stop them, they'll keep moving in that direction until we hit the next high volume level. Then we have enough volume from sellers to come in and stop, or at least slow down the buyers. Now we're back at balance between buyers and sellers. Once the price is at this high volume level, it'll keep trading sideways until one side breaks out. And then it'll move either to the next high volume level above this one, or back to the level it came from. And that's how the market moves. You don't have to know why it moves this way or try to understand it. As long as you know this is how it moves. It's just Wyckoff distribution, which I'm sure you've seen before. Accumulation, then markup, then distribution, then markdown, and then the cycle repeats. So supply and demand levels are really just accumulation and distribution zones that happen before the large moves. So how exactly do we find these supply and demand levels? The first thing we need to do is apply the profiles. The volume on the side of the chart that you saw before is called the volume profile. And the volume profile shows you how much trading happened at each price level, so you know exactly where buyers and sellers are. We want to be on the 30-minute or the 1 hour for the best results. To apply this profile, go to the Trading View Indicators tab. Type VRVP, and you should see this. Visible Range Volume Profile. Then click it. Go to the settings of the indicator and change the row size from 24 to 200. What this is going to do is turn those big bulky volume bars into much smaller ones, so that you can see and understand where the volume is much more accurately. This is going to appear on the right side of the chart and it'll show you all the volume from what's visible on your screen. And now the second profile. We're going to use a second type of volume profile called the Session Volume Profile. In the Indicators tab, type SVP, and you're going to click the first one. Then you're going to go into Settings and change the row size from 24 to 100. SVP is the Session Volume Profile, which shows us the volume profile by trading session, which is usually once a day. And now your setup should look something like this. We have a very precise view of where the volume is located based on the price level. This is what we'll use to draw our levels as precisely as possible. So this obviously looks very complicated and confusing, but don't worry. We only need to use two key components here to get our levels. The first is the point of control, also known as the POC. And this is the level with the highest traded volume for that session, and it usually acts as a sort of price magnet. And when you get multiple POCs aligned horizontally, it usually means that price level is very important. Keep this in mind for later. The second component is high volume nodes. These are the large volume bars on the visible range profile, and these will highlight areas with a lot of trading activity, as we discussed before. These are also extremely important, and they usually coincide with the POCs, but not always, which is why we have to combine both of them to get a more accurate picture. Now let's move on to drawing them. To actually draw the supply and demand levels, we need these two requirements. 1, multiple POCs clustered together, and 2, a high volume node. And as a bonus, we want to see a strong rejection by the price from that area, preferably on both sides. Once all three of those align, we have a strong supply and demand level. So let's try a few of them. Here we have 1, 2, 3, 4 POCs that are very closely aligned, so that fits step 1. Then we need to verify if this aligns with a high volume node. And here we see that it does. We also see that visually we've got tons of strong rejections here on both sides. You see this sharp drop right at the POC here, and other strong rejections around this area. So this is certainly a strong supply and demand level. And we're going to draw it by trying to center it around the highest volume point. And we want the edges to be a point where the volume falls off sharply. And that's our supply and demand level. Most traders will tell you to only look for strong rejections or other minor price action patterns, but those levels turn out to be low quality. We want our level to be as strong and reliable as possible, and high volume is what backs this up. The market will tell you exactly where it wants to go next. You just have to listen. And you'll see, these levels last forever. So let's try another one. We see a few POCs clustered in this area here, and we also see the high volume node. And taking a look at price action, we also have visibly strong rejections in this area. So, just like we did before, let's draw our new supply and demand level. It'll look something like this. And you just rinse and repeat this at every point where you see this. You'll also notice that the distance between each of the levels should be roughly the same. Not exactly the same distance, of course, but you'll notice a certain pattern and rhythm in the way the price moves. And eventually you'll see where a supply and demand level should go. That's when you know you got it. But for now, I'm just going to add a few more supply and demand levels following this same formula. Alright, here are the levels, based on our formula targeting high volume areas. So let's see how these levels play out in the future. Now, notice how the price always reacts to these levels with very high accuracy? That's because it's always gravitating to where the volume is. So this is like a market cheat code in a sense. And there's a few different ways of actually trading this, but we're typically looking for a level-to-level move. We want to enter at one level, then exit at the next. And with this, we can build a highly profitable strategy. Now, if you're still skeptical about all this, I understand, but go ahead and take a look at my Twitter or inside my trading room, and you'll see that I've marked out precise supply and demand levels on ES. And I've been trading these exact levels with extreme precision for years. Quite literally, years. With the same levels I marked just once. I also made an entire course for free that shows you exactly how to trade from beginning to end. Just click the link in the description below to get access. Make sure to like and subscribe, and I'll see you next time.